and welcome to the weekly market view. I'm joined by Bill. Happy Valentine's.
And happy Valentine's to you.
Thank you very much, Bill. I've no doubt you're going out to get a huge bouquet.
Exactly right.
Yes.
I mean, you know, that's moving right along.
Yeah, exactly. Well, let's focus on the more important things. So obviously, not a particularly happy Valentine's Day for the market. So just pulling back a bit. But do you think that that's got anything to do with the GDP numbers out today from the Eurozone, which are all really pretty much miss?
Yes, I think so. We've talked about this before, albeit I'm still positive on the euro. I mean, the FTSE, I was looking for 67, 6,800. But I guess I'm like everybody else. I mean, if we made 300 points in January, you know, I think it's a healthy correction. But one of the things, again, where I'm seeing the correction is in commodity-related stocks. They're getting hit very hard here.
Yeah, so do you think that that's the start of more of a trend? I mean, that obviously big upside move yesterday, but as I say, these GDP numbers have brought things back to reality somewhat.
Yeah, I think so.
So you're expecting more downside before?
Yeah, because again, I think it's a situation where people now can say, well, let's take some profits. Let's sit on the sidelines and get back in. Because if they still like stocks for their fundamentals, and we've had a very nice run, take some profits, whether it be all profits or just a small amount, and just watch away.
Okay. And so the Bank of England inflation report as well we had, which once again we saw Mervyn King say that inflation is going to be higher for longer and growth is going to be lower. So for longer. When's he going to get it right? I mean, you know, he's constantly missing his forecast.
Doesn't have to worry about it.
No, sure, it's not his problem.
You know, 30th of June, thank you very much. You know, where do I stand and sell the big issue and start collecting my pension? But I think one of the things that Sir Mervyn told us yesterday, which was verified with the Eurozone GDP numbers, is growth is struggling. And I think one of the things he did was just here, Chancellor, you know, we've done everything we can, I don't care, whatever you want to call it, but we're not seeing any growth whatsoever. And I do think that, you know, with you know, Mr. Carney coming in on the 1st of July, I mean, he's basically said, you know, he's more interested, yes, inflation and growth are important, but now it's more important for growth. And remember, just last week, we did have the 100th anniversary of the Federal Reserve, whose, you know, their scenario has been non-inflationary growth. And I mean, we're talking about 2.2, 2.5, 2.7. You know, Angus, you know, we remember when it was, you know, 15, 16, 17. So I think slight inflation is positive. And we're starting to see that in some of the housing markets. People say, well, we have all-time low interest rates in reference to mortgages, but the houses are starting to start creeping up. And if they do, so you're starting to see some buying, at least in the housing market, that will flow through in the peripherals.
Yeah, so, I mean, his inflation report was pretty mixed, but obviously he's coming towards the end of his time at the Bank of England. But do you foresee a big shift in the way they do things? Is Mark Carney going to ramp this stimulus up?
I don't know, because then we're getting on in the political aspect of the bank, and the bank should never be political. But remember, no matter what he wants to do, he's only going to be one of 9 votes. And I mean, we see this with the Federal Reserve, with Lacker for the Fishery Fed. I mean, he's voted for, you know, increased interest rates since Abraham Lincoln was a child. So I mean, I think it's a situation where I will see the change in the philosophy, because maybe that's why Mervyn King said we could see 3% well into next year. But one of the things we have to look at is the key thing. One of the 2 things we was talking about was education and national health. Well, remember, in July of this year, we start having the massive increase in tuition fees starting to fall out. So, you know, I expect to see petrol prices stay up. One of the things I think we better start looking at is I see food prices continuing to go up, especially if the food processors, with what's this thing about the beef scandal, all of a sudden, you know, if their processing costs go up. And I mean, you know, in your neighborhood like mine, I mean, every farmer's field in Wiltshire is an outdoor swimming pool. Yeah. So I mean,
food prices are still being a bit of an upward pressure to inflation. And so moving to the other side of the Atlantic, we've very much sort of been focused on fiscal cliff for the early part of this year. It seems to have gone to the back of the stage somewhat, but we have got this sequester coming in a couple of weeks' time.
1st of March, yeah.
Yeah, so do you foresee a bit more volatility there? And really, there was very little on it in Obama's State of Union speech.
Yes, and I think basically what he said was he wants to raise the minimum wage up 25%. And he basically said, let's get on with reality. Now, and also I do want to negate the malicious rumor that's going on. Sequester will not be going into the House of Lords. Okay, I don't want to talk about people who get confused. Now, maybe I'm being naive again. It's sort of like the fiscal cliff never really happened. This currency wars, I don't see that any problem with the G20. And I think this sequester, again, will be passed, and I think it will. But we have seen already in consumer sentiment and U.S. retail sales, the hit of the January paychecks, okay? And I think it came out to about like $90 US for the average, taxpayer. When you don't have much going in here, we see the same thing, The wages are nowhere close to where inflation is. So you've got the consumer being really strapped on both sides. But I think one of the things, we can talk about this later, I'm quite excited about this EU-US potential trade pact. I think that could be massive, okay?
Yeah. Well, that's one to watch, and I suppose that we'll probably get more of that as time goes on.
Yeah, I think so. And I think with that, I don't mean to interrupt, I think with that, though, now that it's out in the open and everybody knows about it, the president and or the people who want the U.S. not to hold back in having domestic political problems to interfere with the global recovery. And I said, even the Republicans, and I mean, one of the points that Obama said, this is the same situation. We go back to, the U.S. with the NAFTA, the North American Free Trade. Again, you had regions in the States that said, we don't want free trade with the Mexicans and the Canadians. Well, it's been a boon. And I think the same thing can happen in the U.S. because, this is a 24/7 global economy.
Yeah.
Now, the only problem with that is think about the future. Which currency are they going to use?
Well, very true. That's a very big question you just asked there. But I don't think we've got time to answer it this week. But as ever, thanks very much.
Brilliant.
We'll see you next week.
Yes.